Welcome to Real Talk Columbus, discussing today's market trends and answering your questions. All right, welcome in. So today I'm going to discuss some tips about filing your taxes when it comes to your real property, your personal residence. And reason for that being is it's tax season. A lot of people are filling that information out right now. So here we go. The first tip is yes, you can still deduct your mortgage interest as a part of your taxes. Now, there is a cap due to the tax reform that we had a couple years ago that is now capped at $750,000 in loan amount for being able to deduct your mortgage interest if you purchased your property after December 15th, 2017. If you purchased your property before that date, the cap is actually up to $1 million. And if you have a second home, yes, you can still deduct the mortgage interest on your second home as well, as long as it's still underneath that aggregate cap amount, whether it's $750,000 or $1 million. Okay, so the second thing I have written down here was about paying capital gains tax. If you've lived in your house for 2 out of the last 5 years and you sold it and you did earn a profit and you earned capital gains, you are exempt from paying capital gains tax if you are single for anything under $250,000, and if you are married, it's anything under $500,000. So I get that question all the time. Do I have to pay capital gains? If it was your primary residence at least 2 out of the last 5 years, you most likely won't have to pay capital gains unless you made a lot of money. All right, so going to the next one. Home equity line of credit. Yes, you can no longer deduct the mortgage interest on a home equity line of credit unless, and this is a big one, unless you took that money, the funds from the home equity line of credit, and you actually used it to do significant updates to your property. So a lot of people are taking out a home equity line and remodeling a bathroom, remodeling a kitchen, finishing the basement, whatever it was. If you did one of those things, then yes, you can deduct it. Or most likely you should be able to deduct it. Of course, you should talk to an accountant before you do it. All right, moving on from there. The last thing I had down here, if you are a member of the military or the armed forces, you can actually deduct your moving expenses. So that's a huge bonus. So there you go. Those are my simple tips about filing your taxes when it comes to property. Please use this as a disclaimer. I am not a CPA or a tax person, so definitely check with your accountant before using any of these tips when you file your taxes. Thanks a lot, and have a great day.